Let's talk Wayfair. The last time you said you were going short them was in early April. Since then, the shares have basically doubled. Why is now the time to short once again?
Actually, the stock went down after the April earnings report, and then in May, from May till now, it's around almost doubled, yes. So what's new, actually, is just yesterday a report came out. So there's a group of data scientists, a few professors who actually just sold their business to Nike recently, who understand customer analytics. And they put out a report last year discussing the unit economics of Wayfair. And as a short seller, I read it with great interest. They actually just renewed this report this year, and I wanted to see if anything changed. Did the business at Wayfair get better, stay the same, or get worse? And sure enough, it got worse. So I look at a stock, I say it's doubled, and the business has gotten worse. And then I did some additional research, and I said it's a good time to re-enter a short position.
Andrew, one of the key areas that you really show is the fact that earnings per share estimates have been tracking down. All the meantime, we've seen the stock tracking higher. It's something we can show on the Bloomberg right now. You say this is confounding and really sets it apart from perhaps the outperformers like Amazon. Talk us through as to perhaps why you think the stock has continued to rally despite analysts getting somewhat more cautious.
You know, I mean, investing is a humbling experience. It really is. So for people who follow Citron, you know, I was initially said to short Wayfair in 2015. And if you want to look at the EPS of the business, I was actually correct. This year they were supposed to earn, I think, like $3 a share. They're going to lose $1. Or, I'm sorry, they're supposed to earn like $1.50. They're going to lose $3. I take that back. So I've been right on the trajectory of the business, but not the stock. What do the bulls see in the stock? The only bull argument I could hear is it's a baby Amazon, but in reality, it's the anti-Amazon. And for anyone who's long Amazon, it's a wonderful hedge to be short Wayfair. Because what you'll see if you read the report, as Amazon stock started to increase, when their earnings started to increase. And a difference to that, as you saw from the chart, is Wayfair's earnings were going lower as the stock is going higher. Yeah. And that's just a function of the market, but I don't think it's going to last for long. So, you know, I don't even think the market has to correct for this for Wayfair to correct.
Andrew, I think you raised an interesting point, which is people are seeing another Amazon in Wayfair, in that they can keep spending money and losing money, but they're growing their sales at such a fast rate that it will eventually become a dominant player. What do you say to them? Why is Wayfair the anti-Amazon when it's trying to sell online and disintermediate some of the restoration hardware?
Because it's shown, Amazon has shown the ability to scale. Wayfair has not. They're consistently buying customers, and that's directly, if you look at the charts, for the growth of the earnings. This company will sacrifice bottom line for top line and continue to do it as Wall Street rewards them. That's not what we're seeing at Amazon, where they're actually beating expectations. So that's the key thing. It's just not a business that scales. Also, Amazon is pretty much that 800-pound gorilla. You're seeing with Wayfair right now, I mean, competition 3 years ago, people said, yeah, but they're competing against offline competitors. Now, if you look at Restoration Hardware, Williams-Sonoma, IKEA's private, so they don't show that information, over 50% of the sales are coming from online. So, you know, Wayfair has become the anti-Amazon.
We did see, it's an interesting chart that we just showed up, just showing, yes, as you rightly pointed out, the earnings per share outlook from analysts has been getting more bearish. We've been seeing the earnings per share guidance coming down, but you've still seen some optimism around where the sales path is going to be in the future for Wayfair. Will we not therefore see at some point, as sales pick up, the earnings per share eventually will, the profitability will eventually come to the bottom line as sales ramp up? Why, or where do you see sales for Wayfair getting out of whack?
I mean, we haven't seen it yet. I mean, it's been, since I've covered the stock, it's been 3 years. Yeah. So in 3 years, you should be able to show some scalability. And now what the analysts are reaching for is, one said, let's fix international. That's not happening. If you're not making it profitable in the U.S., you're not making it profitable in France or Germany or Europe. And now someone just said advertising, I heard yesterday came out. They've had an advertising model for 3 years. So at some point, I don't know when it's going to be, but I have no problem being short here if I look at where the stock is, if I look at my long portfolio, being short Wayfair, knowing You know, I think tomorrow if Amazon, something were to happen in the market, Amazon's down 25, 30%, which would be amazingly huge, you could buy it. I think Wayfair can actually go down 40, 50%. It was $60, $62, I think, in May.
Yeah.
It's the same company as it was in May.
But Andrew, I think that your thesis raises a really interesting question about our time, which is what could the catalyst be at a time of incredible earnings and where the world is flush with cash from all corners, right? I mean, what are you waiting for that could potentially create profits here?
If you're talking about this one particular stock, you know, it's tough. I mean, obviously no one out there has a crystal ball. So, you know, look, when the market corrected, you know, for a bit in February, who knew that was coming? You know, who knows? I don't know the catalyst to make the market correct. But I do know what stocks do I want to be short, whether the market corrects or does not, at what prices. And this is one of those stocks. If it goes higher for some reason, then I can sell more. I sat on the sideline. I watched the stock keep going up in value. I was very fortunate. I covered some in the second quarter, and you know, I stayed short a smaller amount, and I've watched it. I said, when I finally read the report from what I wrote, people who are smarter than me, I can't rely on the sell side research. I really don't think I just don't think it's adequate. So when I looked at the research in this particular report, I saw 1 year later the unit economics not there, a business that is deteriorating. Meanwhile, a stock price that has increased. As a short seller for me, it's a wonderful opportunity, especially if I have to hedge against some long portfolio.
Some seem to agree with you. 16% of the float is currently shorted for Wayfair, and you're adding your voice.
Which, by the way, is one of the lowest points. It's one of the lowest short interest the stock has had in the past 12 months, which is also a nice counter indicator.